Welcome to the Explainer. Today, we're jumping right into a sharp, high-level commercial analysis explicitly tailored for you, the international port infrastructure investors sizing up the Black Sea market. Whether you're eyeing capital deployment, supply chain resilience, or major public-private partnerships, you need a precise, ground-level understanding of what's actually happening in Ukraine's most vital maritime hubs, Odesa and Chornomorsk. We're going to cut right through the noise, strip away those aggregate data traps, and look strictly at the raw commercial realities of these two critical assets. Let's get into it. Okay, let's dive into this. 124%. That is the massive, almost unbelievable surge in combined cargo throughput between 2023 and 2024 for Odesa and Chornomorsk. I mean, in just 1 year, the volume moving through these two ports literally more than doubled. This single metric completely flips the script. It tells us that despite immense regional complexities, these maritime logistics corridors aren't just barely surviving, they're actively operating at a massive, commercially viable scale. For an infrastructure investor like you, this number is a giant flashing sign that the market is deeply resilient and rapidly normalizing. So here's our roadmap for today's briefing. First up, the Black Sea opportunity. Second, foreign commercial players. Third, cargo throughput and trends. Fourth, the massive Chornomorsk concession. And finally, essential due diligence. All right, starting off with Section 1, the Black Sea opportunity and market recovery. And this brilliantly illustrates the fundamental reality here. Odesa and Chornomorsk are wide open for business. They've firmly reclaimed their historical roles as massive export platforms. The normalization of seaborne commercial logistics is well underway, and these hubs are, frankly, the primary arteries for global trade flowing out of the region. Just look at the balance sheet. In 2023, the combined cargo throughput sat at just under 20 million tons, 19.82 to be exact. Fast forward just 12 months to the end of 2024, and that figure absolutely exploded to 44.35 million tons. For anyone evaluating commercial viability here, this is your proof of concept. The demand is red hot, the marine infrastructure is facilitating the flow, and the cargo is moving. Moving on to Section 2, foreign commercial players. Let's clarify exactly what's happening in the market. Now, there's a huge market misconception right now regarding international investments, and we really need to dispel it before you take your diligence any further. As an investor, you know it's incredibly easy to read a snappy headline and completely misunderstand the structural reality of who is operating what. So we have to strictly define the difference between a commercial operator and a state port concession. A commercial operator might own, lease, or just run specific terminals or industrial facilities within the port, right? A state port concession, on the other hand, is a formal, government-awarded, long-term public-private partnership, a PPP, where you're taking over state assets for modernization and management. This distinction is absolutely critical for your transaction diligence. A foreign operator should never, ever be automatically described as a concessionaire. So, the crucial point is this. Right now, there are currently 0 awarded international state port concessions at Odesa or Chornomorsk. Yes, the ports are incredibly busy. Yes, foreign capital is highly active. But as of this briefing, there are absolutely no executed, formal international concession awards in place at either port. If you're reading reports that claim otherwise, they're conflating private terminal ownership with state-awarded PPPs. It's an easy trap to fall into, but you need to avoid it. Now, that definitely doesn't mean foreign capital is sitting on the sidelines. Actually, foreign capital is already deeply, deeply entrenched here. Take Germany's HLA, for example. They've been operating the container terminal Odesa since 2001. That is a serious legacy private sector position. Then you've got the American agribusiness giant ADM with a well-documented grain terminal footprint in Odesa, plus oil seed processing operations in Chornomorsk. And of course, the global agricultural merchant Louis Dreyfus Company is running a multi-commodity terminal in Odesa. The takeaway? These are massive, sophisticated players committed to the region as commercial operators, just not as state concessionaires. All right, Section 3, cargo throughput and trends. Let's look at the data. Boom. So we know total volume hit that astonishing 44.35 million tons in 2024. But as infrastructure investors, we don't just invest in volume, right? We invest in specific commodities. Breaking down this cargo mix, agricultural bulk, your grains, oilseeds, vegetable oils, is the undeniable king. It's the core volume driver, with over 60 million tons handled nationally in 2024. Coming in second is heavy industrial cargo, mostly iron ore and ferrous metals, pulling in 18.5 million tons nationally. But pay close attention to that third rank, containerized and general cargo. While bulk commodities are the historical anchor, we're seeing a material, highly significant uptick in container activity heading into 2025. This is a vital directional indicator. It signals an incremental shift toward higher value trade flows and real supply chain diversification beyond just bulk raw materials. And the way this cargo is handled is highly specific to the port itself. Let's contrast their commercial profiles. Odesa's narrative is heavily focused on container logistics, rail capacity, and multi-commodity capabilities. It has a much stronger internationalized private terminal profile. Chornomorsk, on the other hand, is your broad, universal bulk giant. It's strong in grain, but it holds massive container potential. And more importantly, as you'll see, it's the site of a major state-led public-private partnership development opportunity. Which brings us perfectly to Section 4, the Chornomorsk concession. This is the mega opportunity. Now, what's really interesting about this slide is that earlier, we noted there are 0 awarded concessions right now. Well, that is about to change. We're looking at the imminent, highly lucrative transition of Chornomorsk's first container terminals from state management to a long-term private concessionaire. Just look at the sheer gravity of the global players who've pre-qualified for this competitive dialogue. We're talking about APM terminals out of the Netherlands, the Mariner and TAS Consortium, Turkey's Yale Port Holding, and a consortium led by Abu Dhabi Ports Company. I mean, this isn't some speculative pie-in-the-sky venture. These are heavy-hitting, top-tier global operators dedicating immense diligence resources to secure this exact asset. And they're aggressively pursuing it for good reason. The sheer scale of this concept is staggering. The preliminary parameters reportedly contemplate a massive 40-year concession period. You're looking at very substantial capital expenditure commitments. The initial development has to deliver at least 250,000 TEUs, or 20-foot equivalent units, of container capacity. And on top of that, within the first 3 years, the operator has to guarantee approximately 3 million tons of general cargo capacity. Without a doubt, this represents one of the most significant near-term international port operator opportunities in all of Eastern Europe. Let's wrap things up with Section 5, essential due diligence and mitigating risk. Because, let's face it, recognizing the opportunity is only half the battle. Protecting your capital by deeply understanding the structural risks and data traps during your research phase, that is where the real commercial analysis happens. And the biggest data trap you'll face right out of the gate is geography. You absolutely must clearly delineate the deepwater port of Pivdenyo from Odesa and Chornomorsk. Now, Pivdenyo is an incredibly important port on its own, and it's actually where Cargill has its major Neptune terminal investment. But public statistics frequently lump all 3 of these ports together into one aggregate metric called Greater Odesa. If you don't parse that data out, you are going to overinflate the actual metrics for Odesa and Chornomorsk and completely mismodel your terminal valuations. It's a classic trap. You also have to be hyper-vigilant about vessel statistics, because honestly, public data in this region can give an analyst a total migraine. A clean annual count of unique vessel calls for a single port, it's rarely published. Public data constantly mixes unique ships with total port calls. Furthermore, movement-based reporting simply adds arrivals and departures together, which artificially doubles the count right there. And keep in mind, when you see flashy headlines boasting about 6,000 vessels, that usually refers to the entire maritime corridor over a multi-year period, not an annualized figure for one individual port. Plus, full year 2025 port-specific data remains frustratingly inconsistent in public channels. So, proceed with caution. Let's move to and see how this builds into a concrete, actionable playbook for your proprietary data strategy. Step 1. Bypass those public headlines and obtain a clean, AIS-derived, automatic identification system, vessel call dataset that is geofenced specifically to Odesa and Chornomorsk bursts. Step 2. Closely track the Chornomorsk concession tender. You want to monitor bidder changes, final capital expenditure commitments, and tariff structures. And Step 3. Map the port-adjacent logistics. Don't just look at the water. Map out the rail links, the grain elevators, and the warehousing capacities that actually feed these terminals. The fundamentals of the Black Sea market are rapidly evolving. Throughput is rebounding, major global operators are circling, and these public-private partnership models are finally solidifying. So I'll leave you with this provocative thought for your next investment committee meeting. With Chornomorsk poised for a massive 40-year transformation, will this accelerating shift toward higher-value containerized trade completely redefine the Black Sea's investment hierarchy before the ink on that concession even dries? Thank you for joining this explainer. The opportunity is there, so it's time to dig into your diligence.